It is a common theme that some banks may have gotten too big to fail, but have banks also gotten too big to innovate? In the last few years, banks seem to have lost their innovative edge, coinciding with one of the worst financial crises our country has experienced and leaving customers looking around for solutions that banks don't have. Where has innovation in the banking industry historically come from, and why is it not happening now? Checks have been in use since the 3rd century. In Persia, the Sassanid Empire issued letters of credit known as shak. This is where we get the name of the check or check. You are forgiven if you perceive banking as a very traditional business. Paul Volcker, former Federal Reserve Chairman, once said that the ATM was the last real innovation in banking. But is banking really still in its ancient days? In the 90s, the internet and internet banking significantly changed the way we interact with and think about banking. It gave consumers choice and control. Social media increased transparency, so now we have direct feedback on how banks are servicing clients. We know when a bank sucks and hides behind outdated processes or expensive fee structures. We also get to see how they interact and treat their customers. When mobile came along, our expectations of banking also changed. Now we expect banks to deliver while we're on the move. The next stage is mobile payments. When you can make a mobile payment from your phone, what happens to checks, to cash? How quickly will they disappear? The nature of large banks is that they take a long time to change. They seem to think that customers will put up with slow innovation because, until now, we have had only a few choices. If they think customers will put up with the lack of innovation, they're wrong. What does the future hold for the banking industry? That is the framework of our discussion today at South by Southwest.